Hello everybody, this is the pre-market trade of the day. We first look at our pair from the last video. It was the British pound against the Norwegian krone. And as I told you, we can expect some movement today because of the Brexit discussions. Today Mrs. May spoke in the parliament and there were some mixed news, I would say. It seems that the Brexit could be postponed maybe some weeks. Next week the parliament will vote if they want to postpone it for 2 or 3 months, or if they don't want to postpone it. And this was the reason I took this pair today. I wanted a pair which has not a second major pair in it. This is the reason why I used the British pound against the Norwegian krone, exotic pair. And as I told you in my video, we can expect that the pair moves very strong in one direction, and we want to catch some reversal of this strong move. And I told you that I don't like this zone here that much. I want to look around here for the reversal, or if we get a drop for reversal around these 3 areas here. And as the day began, here was the time of my video. You can see overnight and during the first hours of the London session, the pound moved very strong upwards here. We got then this big reaction here, and this was the moment Mrs. May began her speech, and then you can see traders were not very amused, and then we get this drop here, and then we get again a move upwards, and the only reason for this move again up was to catch here these stop losses. Mrs. May spoke here and price was going down, and many traders jumped in here in a sell trade. They were very sure it will go down, 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 and placed of course the stop loss here like they told on every tutorial. And this was the reason market makers pushed price up again to catch all the stop losses, that not that many traders stayed in this down move here. And this was the moment I jumped in this trade here. And all began with an alert on my mobile phone. I was not at home at this moment. I was not in my office. And on my mobile phone, I got then here this alert that the British pound Norwegian krone was on this region I marked for my alert. By the way, you can see I traded today the pound against the Kiwi too, and made here a really nice profit. And I saw the alert. I had only my mobile phone, and because from the time it was after the Frankfurt close, and after the Frankfurt close I was very sure that price will not come over our blue box here, our order block. I was very sure that because of this stop loss hunt, we will see a very fast reaction here before price will reach exactly our position here. And this was the reason I opened immediately on my mobile phone then a sell trade, and you can see it here on my screenshot. Here we are on my live account, of course, and I opened here the sell trade, and it began really nice here. And then a few minutes later, the price was here at the support area. Now this here acts as support, and I decided here to close 90% of my trade and let 10% run further risk-free with a break-even stop loss. So I secured here my profit, locked my profit. This was part 1 of my trade. And then I closed the second part. I open M15 chart, and we can see it exactly. The second part I closed here as the price began to go up again, and then here around I closed the second part of my trade, and then I was out. And you can see after that it moved more or less sideways, so it was a good decision here. It was not that easy, of course, to trade because normally we jump in if we come directly to our order blocks, but this was this special situation that I saw the stop hunt here for the hunt for the stop losses here. And the second fact that we are after the Frankfurt close and the steam is normally then out of the market. And I saw then that there comes a down move, and this was the reason I jumped earlier in, and I was very sure that we not get a next attempt to come here to our lines. So I jumped in this down move, and it was the correct decision here. This is if you trade for more than 5 years the Forex market, you see such situations and decide then to jump in earlier. For example, in this case, if you're total new to Forex, it's total okay. If you did not here trade and waited for the reaction directly on the line, it's also okay. But with if you traded Forex longer, then you can see such situation where you know, okay, the only reason that it comes that much fast again up is because the market makers and brokers want that all the traders are in this down move kick out of this trade here and catch all the stop losses from here. So I collected all the information for this 2-part move, and I did the math how much we could make with this trade. Depends on what lot size you had traded it. And here it is. We had the first part with 170 pips move with an exotic pair. And then I closed the 90%, and the part 2 went 316 pips. And here I show you how much such moves are worth, depends on what lot size you had traded it. For example, if you had only traded it with a micro lot, then you made only 1.74 euros. With a mini lot, you could make 17 euros with this first move, or with a standard lot 174 euros, for example. And the part 2, where then I closed at the end, the last of my trade moved 316 pips, and this is worth with a micro lot €3.24, or with a mini lot 32 euros, or with a standard lot 320 euros. And overall you could make, depends on your lot size, with this 2-part trade, this kind of money here. This should give you an information what such moves are worth. It depends on your risk appetite and your lot sizes. And important is always the pip value for such exotic pairs, that we know how many do we get for every pip price moves, depends on the lot size. And I will add this information in the next version of Metagrid. I guess I want to do it. I will delete maybe, or very sure, this swap information here, because I got the feedback that nobody needs this swap information here. I will add in instead the pip value information, that we can see how much can we earn with every pip move on a pair. This is especially very interesting on such exotic pairs. So the pound was a very nice trade today, and very interesting. At the beginning of the trading day, I followed a chat where some members said, oh, today don't trade the British pound. Never ever trade a pound today because of all this news. Stay out of the market with the pound. This is totally insane, because we want to trade such moves. We want to have news in the market. We need movement in the market. And if we know that on such a day we can expect big news, we want to participate on such a move. In this case, we participated on the reversal. It was not possible with our trading method, with the order blocks, to come into this buy trade, because there was no buy reaction here. The buy order blocks were all deeper in this case. So of course, if we had here a down move to this area and then it was going up, we had the possibility in this case to jump in such a buy move. but in my video I already told you that we look for reversal, that we jump in at the end of a big up move or a big down move. In this case it was the big up move where we catch the reversal at the end of the day. And of course we want to trade such moves. We have to be more careful on such news days, but it's insane to say we don't want to trade a pound on a day with big news. Then you can stay out of the market completely if you don't want to trade such moves. Okay, so now we look for a new pair for the pre-market trade of the day. And today on Wednesday I want to trade again the dollar and the dollar against the South African rand. This pair I like because if we make the chart a little bit smaller and we are on the H1 time frame, I want to be a buyer. I already placed here pending buy. If you see the market structure, you see that we have here, first of all, a demand zone, the red box painted from the Hypnotic software. This is a daily demand zone because it's in red painted. So we have a big demand zone here, and in this demand zone we have two smaller demand zones nested. The white boxes are from the H1 time frame. So in the demand on the daily time frame we have two H1 demand zones painted. So demand means that we can here expect that price goes up again. And normally we see such reactions if price moves very quick from a place away, and you can see it did here. Here price came down, very small candles, and then suddenly this shoot up, and normally price comes down to such regions and then gives again such a reaction. And I like this complete area here from here to this bank sell level, or better to say to this next demand zones. Here again you can see we get a lot of nested demand zones here. And the only thing I want to trade today is a grid from here to here, because I think if price goes here down, we will see here buy reactions, that we here get a bounce somewhere here in this area. And of course we can here expect stop losses if we are thinking of a market maker. If we want to catch stop losses, here should be stop losses from this up move. All the traders from this up move should have placed their stop losses here behind this area here. And if we are a market maker and want to catch such a stop loss, we want price move here. And of course then all traders are from this up move are kicked out of this trade if they are still in this trade, but the long-term traders of course often stay that long. So my thinking is that price could test this region today here in this area, and I want to go in with my pending buy entry here at the end of this first H1 demand zone here. And then I already calculated here a grid. If we click on preview, this is my grid I want to trade. You can see the red lines are scale ins for buy trades, and the grid goes until the beginning of this next demand zone here. So a bigger grid, which can of course cause a bigger drawdown if the price really comes completely here down. So be aware if you want to trade such a grid, or if you make a bigger one or no grid at all. But this is for me a classical grid trading position here, where we can hope that price comes here down, deeps here in, and gives again a reaction. And then we have to see when we go out of the trade, or if we close a part of the trade. And I make here a positive grid too. You see the green lines are scale ins for buy trades too. In the case that price exactly bounces here and then goes up again, then I want to scale in some trades here too. I cannot say at the moment how long I would let open this trade, when I will close it. It really depends on the price action I see in this grid here. If we come to this grid and get a trade, then I will decide how long I stay in. Of course, it's possible too that we get here a loser. We don't know it. My stop loss I would place here below this market structure. So I would here risk a bigger drawdown or a bigger loss because of all the pips we made in February. So at the end of the month we can make here this trade with more risk, and then maybe we see here a good trade. So I think it will go down and bounce. Of course, it can happen different. It also is possible that it goes up. I don't want to sell this pair at the moment. I only want to look for this buy opportunity. This is the only one I want to look on Wednesday on this pair. It's already placed here, and it's ready for enter or to enter this trade. I wait and see what happens. And in 24 hours, we will know if this trade works out or not. And until then, I wish you again a very good trading day. Goodbye.